Welcome to Momentum Monday. Today is Sunday, July 21st.
What's up, Ivan? I'm not going to brag, but it's 1 a.m. here in London. And since we haven't missed a Momentum Monday in a couple of years, the show must go on.
It's a record.
I think we have quite a streak going. Do you have any idea how long it is?
More than a year, for sure.
Okay, so let's get right to the action. You're in San Diego. I'm in London. The markets, I'm trying to front run you on tomorrow's swing trades. Is that possible?
Of course. Why not?
All right. I'm at my favorite hotel here in London. Just one night, Charlotte Street Hotel. It's a great hotel.
Yeah, it looks good.
Yeah, they gave me a 2-story suite. Really kind of cool. It's got like a bedroom up there, and I'm right in a great part of London. All right, let's go to the S&P in the markets. I will say that, Ivan, prices look good. Sentiment remains good in the sense that people are pretty skeptical. Can't really say much to fundamentals. I don't know what fundamentals people are looking at. Fed wants to cut rates, or the president wants to cut rates, despite the fact that the market's at an all-time high, and I don't know what kind of borrowing he needs to stimulate with.
Well, this is why last week we saw gold and silver just breaking out.
Yeah, there's been so many. I mean, silver's still 70% below its 2011 highs, so I don't read much into that. Whereas Bitcoin is interesting. I mean, people are excited about silver in 2019. Just reminds me how stupid markets can be. So don't care about silver, care about software. Bitcoin is software is the new gold. At a minimum case, forget GBTC. There's a million ways to buy actual Bitcoin, and if you've taken enough time to read 100 gold and silver articles and haven't opened a crypto account in the last 5 years, you are the sucker in the room. Software is the new commodity, and decentralization is the new store of value. All right, so S&P, Ivan, get to it.
Okay, so we are still near all-time highs, but last week we saw some signs of selling pressure in multiple sectors, and as you can see, the market finished down for the week. It managed to hold its rising 20-day exponential moving average. I'm thinking there is a good chance that we test 295, depending on the.
Okay, yeah. I mean, listen, we get a test, but you're not bearish.
No, I'm not bearish. I'm just, from a swing trading perspective, I'm cautious. And if we see the S&P 500 closing and below that 20-day and not quickly recapturing it, then I might look into some bearish swing ideas. As of right now, yeah, I'm not bearish, but I'm gonna say I'm super bullish until I see some a bounce.
I'd love to be super bullish. I'm already long too many names. Breadth is not fantastic, but like I said, price and sentiment line up really well here. Seasonally, they say sell may go away, but I don't know how much that has worked the last 20 years. And, there's, interest rates are just pathetic. And again, I'll go to the fact that every new fintech bank and non-bank investment advisor is pitching 2.5% cash. And, you don't see, if scam is if cash is a scam, great. I mean, I don't know, we're all going to hell, but it's very hard for me to call this a speculative bubble when startups are pitching 2.5% cash, not get rich quick schemes. The get rich quick schemes are all in the decentralized world, it seems, with tokens and certain crypto assets. They've kind of been taken off the exchange. There's always going to be people pitching weird deals and penny stocks, etc. But it's hard for me to see beyond gentle pullbacks here. The risk being, of course, headline news. Okay, what's the weak sector line? What got you concerned last week?
Well, the earnings season has just begun.
Okay, good. So a lot of stuff that's run, like with Netflix, you can see you'll start.
Definitely a major breakdown in Netflix, close below its
that's ugly.
Big support level near 340, under 320 as well. So I'm thinking 300 is very likely to get tested.
Yeah. I had linked a couple weeks ago or a week ago to Stephen Place, who's a great options trader, who was saying he wasn't predicting which way it was coming, but you can tell if you look back at that Netflix trade, and that's the one 8 to 80 company I don't own that I've been pretty boisterous about, just no position, it was queuing for a big move. The options markets had a big move coming. Generally moves big around earnings. You could see how it was kind of building, and then boom. I don't think this is a boom that in typical bull market fashion quickly retraces itself. I think if the markets get weak, it gets weak. I don't think it'll bounce as fast with the market. Disney, if we look at Disney, it wasn't affected as much, Ivan.
I mean, Disney's streaming service hasn't even started yet, and Netflix is already missing their own subscribers growth forecasts.
So, yeah, listen, Disney has great content, and Netflix has good content, but doesn't have that library that Disney has, and Disney has that brand, that 8 to 80, kid, that hook them while they're young, and they're just starting to re-release stuff and update content. They have that distribution, man. I'm long Disney, so I like to see it, but Netflix, it'll be hard, I think, for Disney to really ramp until we see what the real numbers are for Disney. All right, what else looks good?
Well, last week we saw some powerful moves in cybersecurity stocks.
Yes.
This is a new IPO, CrowdStrike. I mean, valuation is kind of insane, but anything can happen. If fake meat can be worth more than $10 billion, I think anything is possible. So,
you heard it here first. I like that, Ivan.
Very good earnings report. The beat the estimates, gapped near all-time high.
If you gun to your head, if you got to own CrowdStrike versus Beyond Meat, what do you pick?
Longer term, probably neither. Short term,
that wasn't the question.
Both of them look good.
Yes, good answer. I'm not trading in either. We've talked about this security sector for so long. I just don't have a true handle on it because I don't use any of the products. The product that we grew up with, Symantec, is a turd. We consider Symantec vaporware or just malware at this point itself. Spam. I have this long post that I'm working on that about privacy and about security, but the security market's hot.
Yeah, last week we saw some pretty good breakouts, big breakouts in cyber.
Cyber is probably the leader.
Yeah, and also ZS.
And Zscaler is right there behind. The industry used to be dominated by Checkpoint, CHKP, but it's just kind of broke out. It was playing the laggard there, and another lesson is 132 false breakout. AYX is another one in this space. It's been a monster.
So as you can see on Friday quite a few reversals on Friday, like fake breakouts and just stocks closing near their lows. So I wouldn't be surprised to see on Monday just continued weakness. So the question is how soon the deep buyers will step up and bounce them, considering that they had a big run since the beginning of June, so for the past 6-7 weeks, and now earnings are coming up. We'll see thousands of companies will report in the next 3 weeks. It's very busy. The schedule is very busy. And I guess the market will wait to see, many people will wait to see some reaction.
A couple of my long-time favorites that I'm long, Twilio. I mean, it's just digested a massive move and won't give ground.
Yeah, Twilio is looking great. I think 150 seems like an important pivotal level.
I mean, they've had every chance to sell that stock off. And, unlike Netflix, if we look at Twilio, it's kind of digesting, but in a much more constructive pattern,
Netflix was constructive as well, but the market was really, really surprised by those numbers.
It wasn't. It wasn't because it feels like it's overowned. It's just that you don't get fired for owning Netflix, and I just don't buy it. No one still knows about Twilio. The other one being Shopify. I think it's completely misunderstood, including myself. I followed it for years and owned it, and sold too much too soon. But I think what's interesting about Shopify is they were the ones that I used to say Facebook should buy them. But in the end, they get now a $35 billion. No one can buy them. I was going to look at Walmart here because I think Walmart is the one that if they were really serious about taking on Amazon or giving them a scare, instead of buying Bonobos, which is great for Bonobos and all these small brands to compete with Amazon around. I see people wear Bonobos, Ivan, and I go, gee, you're wearing Walmart pants. Whereas I thought Bonobos was a cool brand. My son was wearing the golf pants, but Lulu's going to destroy them. No one wants to wear Walmart clothing. And so Walmart is breaking out and doing fine. Go back to Walmart. So I just want to see the market cap. If they wanted to cut $300 billion, I mean, they're not going to do it. But, what would be bold to mess with Amazon and to use the Amazon Walmart brand would be to buy Shopify, because Shopify is the one company, although not directly competitive with Amazon, is living well in an Amazon world. And of course, it's overvalued, but they paid so much money already, Walmart, to get into this business. To take on Amazon at all costs, and I think they've attacked it wrong. Whereas the platform of Shopify is the right way to go. So I think Shopify dips will continue to get bought. The dips will have to be bigger because at 35 billion, there's very few acquirers, if any, for the company.
Only Apple can afford them.
No, lots of companies can afford them because they should get bought. Because they continue to execute fantastically beyond their core business and build a platform. Next up, Nike. With the tariffs, continuing to rage on. Maybe no more increases. This stock should have blown up again. So this attribute to fashion and what's happening with StockX and GOAT and all these, secondary markets created, and Nike being able to keep their prices high and build their brand on the back of the internet. Lulu continues to execute around fashion and technology as well. So I don't have anything new personally. I mean, what's showing up on our list? We'll share a few names. This is our Market Wisdom product. Ivan and I kind of do this. Ivan does this for a living. I do this with him as we go through Momentum Monday and deeper through this Market Wisdom product. We kind of covered Inspire is one that's interesting to me. It's here in Q2. These are two that I've talked about for a while. Inspire is kind of a sleeper, no pun intended. If you were going to play a major demographic trend, and not have to know anything, if you really just wanted to play a demographic trend in the market, I've talked about this forever. There's two companies, ResMed. Well, there was one company, and because everything else got acquired, there's ResMed, which I don't own anymore, but has been a monster over the years. If you look back at the weekly, they control the sleep market, right? It's a San Diego company, and there you can see and the reason they control it is because all their competitors have been taken off market in private equity. So if you want to be a pure play in the sleep market, this has been the only stock to own. I've talked about this for years on my blog. Okay, INSP comes along and goes public to no fanfare, and has now more than doubled from 2018. I kind of discovered it through IBD and through StockTwits, all-time high lists. And, not cheap, still losing money, but is another pure play on sleep apnea, which is an epidemic in the United States with overweight, bad diet, computer screens. I'm a product of that environment. So Hedgies have a new company to own in this space. So that one stands out to me. Again, doesn't have the earnings, really over my pay grade in terms of the fundamentals of this company, because it's medical instruments. But the medical instruments space, Ivan, has been hot.
Yeah, absolutely. Medical instruments, medical devices, very hot. Look at this one, CS.
Yeah, I own
continues to consolidate near all-time highs. This one, DXDM, it's a huge base here. The all-time high.
Go back to a weekly there, Ivan. I like that one. We've talked about
in 10 days.
Yeah, that's going higher.
So it's looking great. This one had a big pullback, but it managed to hold its 200 days, or maybe that's not a bad spot if you want to open a position, I guess. I mean, I tweeted about it on Thursday. At 30 was a big level.
Yeah.
And buyers will step up to protect it. But it also had a huge move in the past 2 years. And look at it, it was like a penny stock basically. And
penny stock, I think there's a good lesson in here. I get in arguments all the time about it buying $10 and under stocks. And you had plenty of time. I'm sure the stock in its turnaround days from 1 to 10, which is an area I just don't even follow stocks. But you can see even at 10, when it finally got above, 14, 15, still a triple almost, no, double. And you had, way more institution in it. So I think, lesson there is you don't have to catch everything right at the bottom and follow under $10 stocks. There still was a great gain there. Okay. Any other names stand out or sectors, Ivan?
Well, cybersecurity is the main sector for me right now. And as you can see,
we've covered all these names. These have been on our list. What's 64 weeks for Twilio, PayPal, which we're long, 39.
64 weeks, and 250%.
Yeah, I would say my biggest misses are the cyber stocks. You can't be an expert in everything, but if you have expertise in these things and want to share with us, you know how to find us on StockTwits or email, because we're always looking to understand the catalysts behind some of these. But unless anything else stands out with you, Ivan, I'm going to let you go.
No, that's it. That's it for now.
I'm back in San Diego August 1, so we'll hang.
Awesome. The weather here is amazing, so no worries.
Unbelievable. Ireland was just crazy. It's amazing what a summer, how the Irish, how tough they are with this weather. July and August are a beast still pouring and windy and kind of chilly. Have a great week. I'll see you soon.